Welcome back, Alpha Hunters. The markets are closed for the week of April the 5th, the first trading week of April. And let's see what we got going on this week. A very, easy gap up to kind of start the week there, first trading day of April. But we got a quick little roll down to about the middle part of the day, and then we just kind of chop sideways there for the rest of the day. Not a big deal. Kind of rolled down pretty substantially. A nice little gap down, I guess, there for Tuesday. And then it's kind of just a sideways chop for most of the day. Nice little, higher low kind of coming in. Nice little break above the highs towards the end of the day. In and off the session lows. It's looking pretty good going into Wednesday, but we did gap down on Wednesday. But then we did get a very nice strong follow through there. So first, hour and a half kind of bullish, just that gap down. Was a little bit bearish there on the open, but then kind of just chopped sideways there a little bit for a few hours. Then we kind of rolled down there in the afternoon, but did bounce off the session lows. But we had a nice gap up there on Thursday. Very nice gap up. Pulled down a little bit there to kind of start the day, first hour and a half or so. Nice little bounce there going in the middle part of the day. Rolled over hard as we went into close. I was actually not on the live stream there on Thursday, and I was actually thinking, as I was driving through Texas, when I saw this gap up, I think the market was up roughly 0.5%. When I did see it, I was like, man, this is an easy sell. And then, sure enough, we got some Fed talk there that afternoon, and I'm going to go into a little bit of that here in just a sec. But yeah, we got some Fed talk, and it just kind of rolled over from there. So I'll go into the Fed talk here in just a second. But then we had a nice little gap up there on Friday, traded higher for the first half of the day, pulled back for a little bit for about an hour, and then just traded sideways to kind of end out the day. All in all, week down, negative, but, it wasn't bad. Almost weekly highs on Thursday, all the way down to weekly lows easily on Thursday. So yeah, it was a pretty good sell down there on Thursday from high to low. It was a 2% move. So yeah, it was a good little rocker there. When I saw that later on that night, how much the market did wind up selling off, I was like, ooh, wonder what happened. Let's talk about what happened. All right, so March 20th. I know that's not yesterday, but March 20th, we had Fed Day. That was the last time we had Fed Day. And they didn't change, right? They didn't change their forward expectations of 3 rate cuts potentially in the second half of the year or towards the year end. And, they left it unchanged from what their talk was in December. Since then, over the past 2 weeks, so last week, we had some Fed talk come out that said, you know what, maybe we're going to have 2 rate cuts this year. And the market didn't really kind of react to it all that much. I mean, you see last week we did have some, pull down, some bearish days or whatever, but it wasn't like a big deal. And then there was talk of, maybe we'll only have 1, cut by the end of the year. Okay, well, the market still hasn't really done a whole lot. And then we get to that talk then Thursday afternoon. And that was when one of the Fed board members said, maybe we won't have any cuts this year. Guys, this has been like Jerome Powell. This has been Bostic. This has been several other Fed board members coming out and saying this here over the past 2 weeks. Basically just saying, hey, you know what? Maybe we'll not going to do 3 cuts. But it's been the stair-step approach of how this has come out over the past 2 weeks. Okay? It's been, maybe we'll only do 2 cuts. But we still are on path for 3, right? Oh, maybe we'll only do 1 cut, but we're still on path for 3. Maybe we won't do any cuts, but we're still on path for 3. They're just testing the waters. They're seeing what the market is resilient to, and that's what they've been doing for the past 2 weeks. Like, hey, if we change our tune officially, right? Because these are all unofficial, just at some speeches or questions or whatever. It's nothing official. But if they were to change their tune, that's all they're probably doing. They're probably all seeing the same thing. They're probably talking about it. Oh, did you see what the market reaction was to, just talk about 1 cut? Oh, yeah. Well, let's talk about no cuts. What would the market reaction be? Guys, I'm telling you, if they want the market to pull back, which the market has been pretty exuberant, guys, let them pull the market back. That's one reason why the thumbnails changed to sell. I think they want to see less exuberance in the market. They want to see things get a little bit more restrictive. And so if they want to see that happen, let it happen. Okay, I'm not saying go bearish on the market. If you want to play it bearish back down to some of these lower levels around 480, then fine, do that. I think it's not a bad play, but trying to be bearish on the market's always hard. It's the market, but we've been on a pretty good run. I would say at least take it off the table, guys. They've been trying to like send signals that, hey, you know what, we're testing the waters to see what we can get away with, and you know what, the next one is basically saying, hey, you know what, maybe we're gonna look to raise the Fed funds rate. And there started being talk about that here over the past few days this week. We could see, the Fed even get back to raising rates. I think there was even one board member on the Federal Reserve, on the FOMC board member, basically saying, yeah, you know what, maybe we do raise rates by the year end. I wouldn't be surprised if you start to hear more of that and just kind of getting out there and testing the market, testing to see what they can get away with. So anyways, we'll go into more on that in kind of the outlook stuff towards the end. All right, take a look at the VIX. Well, nice week climbing on the VIX. Very nice solid close for the week. Had a very nice solid climb there on Thursday. So still haven't really gotten over the 17, 18 level. We did have that spike up back in February, but nice climb there on Thursday. I mean, if we come out this next week and yields are really pushing higher, market starts to really drop and respect the yield move, maybe we'll see the VIX kind of climb back over 17, 18, which then I would imagine you're probably just going to continue to see some volatility for the near term. DXY, the dollar index. Well, we did start out this week kind of good, strong. I'm not going to say good, just because that depends on your perspective. But we did start out strong, nice little push, and then once we took the yearly high, Tuesday, Wednesday, even into Thursday, we formed a little bit of a lower hammer there. Tried to bounce, tried to continue that bounce Friday, and then we got an upper hammer kind of wick there coming in. So it's an interesting look because we got back-to-back hammer days that are in opposite directions. So basically, you could play this, okay? So you could play this easily. Entry with a stop right here above Friday's wick, or you can play entry, stop down here. So you can play it either way, or just give it more time. Let it see how it consolidates. If it just continues to consolidate here in between the 2 weeks, I would definitely be much more willing to play that either way. So you definitely want to see it close over or under either one of those wicks. So this upper wick on Friday, you want to see it close over it. Thursday's lower wick, you want to see it close below that to probably say, okay, I'd be willing to take that type of trade. GLD, Gold Trust here. Not much to say here. Just should have been in on this already. Don't want to be bearish on this at all. We're breaking out of like decades highs here. Definitely the past couple of years, but going back to 2011, were solidly holding in the upper ends of this kind of channel where we haven't really held up there for the past couple months, and we exploded up through there back in March. So yeah, I mean, it looks good. I mean, you're probably just gonna be adding positions as we have any kind of pullbacks or anything like that. Other than that, gold is your friend. Silver also, I mean, I mostly just focus on gold here, but precious metal commodities, if you're ever talking about like gold looking really good or really bad, you can just variously look at some of the other precious metal commodities. Silver is also looking very well. 10-year yield. Okay, here we go. So we had a very nice strong bounce there on Monday. And if you remember last week, I kind of mentioned like, hey, the way we were setting up last week, like, man, this could fall off. And I wasn't going to be shocked. I kind of mentioned that. I was like, I'm not going to be shocked, but if we kind of just sideways consolidate here and we start to push up, like, okay, we're going to be game on yields. And we saw that almost, not even almost, but immediately on Monday. Like, we screamed higher on yields on some economic and inflation data, and just screamed higher. And then we got some upper wicks come in on Tuesday and Wednesday, but they kept forming highs, and that's kind of important. Okay, but we had a hard time kind of getting through that 4.4 area, and then we had a little bit of a pullback. And what's kind of significant with this pullback is Tuesday, Wednesday, Thursday had a little bit of a feel of an evening star reversal, not clearly holding, the yearly high, but then Friday came back and climbed, and that is the yearly high close. And even if you look intraday, you can see that we climbed right into close on yields. So, guys, I'm telling you, man, yields are about to put a absolute hurt on the market. They are climbing, obviously breaking this little double top that we had. That's pretty bullish. This is a very bullish close that we had on Friday. 4.5% coming really pretty quick, and I think that will be kind of an eyebrow raising moment for a lot of people. If we make this run back up to 5%, guys, I'd be curious to see kind of how the market performs as we get to like 4.5, and kind of as we go through this 4.5 to 5%, because we could be seeing some major bearish moves on the market, because we all know, I mean, the market's been very clear. You hear a lot of people talking about it. Oh, we're going to have rate cuts towards the second half of the year. The market's expecting rate cuts. The market coming into this year was expecting rate cuts to start in March. And now, as we just talked about, the Fed is talking about no rate cuts, potentially just kind of floating that idea out there. And so if we see yields climb, there is a lot of money on the wrong side of what the yield market is about to do. So that is one reason why the thumbnail says sell. 10N2 inversion. Well, yeah, we had a nice little push to start the week. A little bit of a pullback there Thursday, Friday. Definitely did form a little bit of this, kind of like inverted head and shoulders action. So we did break the neckline, I guess technically this week we kind of did. We didn't hold it, but it wasn't pretty coming down into it. So maybe we do have this little bit of a pullback, and maybe we'll get to pushing higher here as we go into next week, next couple of weeks. So it'd be interesting to see. We also get some decent data this next week, so we'll see how the yield curve inversion. It really doesn't matter until we cross the positive line historically. That's the more important metric here to be watching on the 10-2. But once that happens, we'll address it. HYG, high yield corporate bonds. Well, they had that huge breakdown on Monday, Tuesday, tried to rally there Thursday. We all know what happened with the market with some of the comments that were made in the afternoon. Came right back down. This does not set up well, right? If you see this on the stock chart, this does not set up well. You had the breakdown day. You just got sideways consolidation. Moving averages are coming down, about to cross under the 50 there on the moving averages. Yeah, it just doesn't look good. Typically, when we get down here, we bounced, except for this time period back over here in January. But all the other times we've kind of bounced at least, and we tried that and we came right back down. It just doesn't set up well for this next week. Same kind of deal here with the LQD, but obviously we're not doing a sideways channel here. The past couple of months we're doing more of a downtrend. But yeah, we had that breakdown to start the week, came right back down to the lower, I guess, ends of the week. But yeah, it just doesn't look good. So I can definitely see bond prices definitely dropping off this next week as probably yields look to continue to push higher. And talking about that TLT, well, it kind of the same little bit of a retest there on Thursday from that breakdown that it had at the beginning part of the week, right? The yearly low here. And then we got the breakdown, a little bit of a retest higher. Moving averages coming down, also retested right into the yearly lows. And yeah, we broke down pretty good there on Friday. Didn't really hold lower on Thursday. It's kind of surprising seeing this on the chart. Kind of like the other two did, like the LQD, HYG did as the market was kind of rolling over. But it's all right because basically it just kind of ate it on Friday there. So if we are moving back down to the lower end of maybe this channel, I mean, it's got a long, pretty good ways to drop, and that might happen here over the next week or two. All right, taking a look here at the RSP, the Kuwait SP500. One thing that was interesting, since I wasn't on the live stream on Thursday, Friday I was, but we had this little bit of an inverted, or not inverted, but head and shoulders action, right? We had this huge breakdown then on Thursday. We got the retest into that neckline in that 10 EMA there on Friday, and then like it's there, right? I mean, that's kind of just a head and shoulders action there, mostly because of just that Thursday price action. So I could see that play out, and that kind of goes back to another thing I've kind of saying, like I want to see the Qs, the SPY, and the RSP, all three of those guys kind of selling off together to say like, hey, I think we're going to be good here. But we definitely got that on Thursday. Like everything was getting wrecked. So in that afternoon kind of sell off. So not to say we wouldn't see maybe some continuation higher. I mean maybe, but I think I kind of like this this kind of breakdown that it had on there on Thursday. The DIA, the Dow Jones Industrial Average. Well, it was really interesting. We were talking about this on the live stream this week. Oh my gosh, this one. We got this little double top here, right? We got this double top. We came down, broke it, retested into kind of some of these lows. Really, we kind of did that on Wednesday with that high retest, but we had this gap up and then it just dropped off. It just dropped off. Like I kind of mentioned it when I saw the market was up as much as it was Thursday morning. I was like, oh, that's a sell. That's an easy sell. And I don't think the Fed's comments had everything to do with it. I think the market was just wanting to sell and just did it at the opportunity of the Fed comments. So there you go. Anyways, had a pretty good breakdown there. And then obviously we retested here in some of the, Tuesday and Wednesday lower wicks with an upper wick there on Friday. So I wouldn't be surprised to see if we kind of continue to roll lower there as we go into next week. So that's kind of what I'm thinking. The IWM, kind of surprised at how well. I mean, this thing did get wrecked pretty good this week, but there was also some times where it actually held pretty well. Friday really kind of wasn't one of those days, but Thursday wasn't too bad. It was only down 1%. And if you're telling me that yields are climbing or Fed talking about going higher on yields or holding yields higher for longer, I mean, that's not good for, what has supposed to have been the IWM or Russell 2000 stocks. But, it held pretty good there on Thursday, even though it was down 1%, but it had a pretty large gap up there on Thursday. So IWM, I wouldn't be surprised if it maintains some weakness going forward, but I still would rather have more exposure to the IWM stocks. They are the ones that probably haven't seen the bounce as much as like the Qs and the big tech stocks. Speaking of those Qs and big tech stocks, take a look at those Qs. So the Qs got wrecked on Thursday. That afternoon was brutal let's take it from roughly the top of the day all the way down to the low, down about 2.6%, high to low on Thursday. It was a pretty brutal day there for the Qs. They were down 1.5%. There's multiple like lower highs kind of coming in now. Take a quick look at the SPY. We did get a little bit of a higher high here on March 28th compared to March 21st. So now we have lower highs kind of coming in. But, back with that Qs, we were having lower highs across that time period between the 21st to the 28th. So, yeah. I mean, the Qs, it's going to be really difficult for the SPY and probably the rest of the market to really do anything significant without the Qs, the big tech participation, just because they weigh that much. And we could still see some narratives, come from the Fed this next week, and especially as we get some economic data, even pushing the narrative towards, possibly even raising rates later this year. So, and that's not even talking about interest rate and yields, okay? If interest rate and yields start to just rapidly push higher, I mean, stocks will figure it out like, oh yeah, we have a problem. Even if the Fed doesn't even want to raise rates. If yields are going higher, and I've mentioned this before, if yields go higher, they are not dictated by the Fed. Interest rates are not dictated by the Fed. The Fed dictates the Fed funds rate, not interest rates, which is, yields. So if yields push higher, then it's just, to me, that's just more and more reason to just sell stocks, potentially even be bearish. Taking a look at the SPY, round this out. Yeah, I mean, we had a pretty significant blow there on Thursday. Nice little bounce back day on the Qs and the SPY there on Friday. I'm not going to deny that. But for how much we sold off there on Thursday, yeah, I mean, Friday, I mean, it was a bounce back day, but I mean, we could also gap down there on Monday and just continue to sell off. So if we are just going sideways in here, but yields are climbing early part of this next week, just take the opportunity to just continue to sell, be bearish, pick up protective positions and stuff like that. Alpha Hunters, I will be sharing some pictures on live stream Monday, maybe next week on the market outlook of where I was Thursday. But other than that, have a great weekend. Take care. Enjoy watching the solar eclipse on Monday if you do that. Oh yeah, speaking of, I will not be on the live stream on Monday because I will be watching the solar eclipse. So Tuesday we will check out some pictures and stuff that I have to show off from Thursday, and then I'll put it in the market outlook next Friday. Outfitters, have a great weekend. Take care.